Gold monthly, the bull run is not over yet, ING, right? Gold has surged. Here's a quote. Gold has surged more than 15% so far this year and remains at historically high levels. We believe the record-breaking rally is likely to continue through the end of 24 with the current global geopolitical and macroeconomic landscape supporting the precious metal.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we will look at ING's monthly gold report, which kind of gives gold a nice report card for the year thus far. And we'll note India's gold purchases are rising a little bit more pointedly. But first, let's look at the markets. The dollar is up 7 at 105.09. 10-year yields are 4.30, up almost 2 basis points. The S&P 500 is 55.83, up 9 handles. The VIX is 12.51, up 15. Gold is 23.60, up 2 and change. It was up about 5, maybe a little more. Silver is 31.03, up 27 cents. That's very healthy. Copper is 461, up a little over a penny. WTI is down 24 cents at 82.18. Natural gas 228, down 2 cents plus. Bitcoin up 816 at 57,500. So the bounce continues there. Ethereum 3,088, up 71-ish. Palladium and platinum are both up. Palladium really pulling ahead now again. At 1013 and platinum at 997. Maybe that's some sort of a economic comment. Not sure. Grains, pretty mellow. Soybean, unchanged bid at 1158. Corn, unchanged offered at 384. And wheat is 573, up about a penny. Okay. There's your markets. Quick comment about gold and silver yesterday. Gold's day was very bad. Okay, for the day, we're talking about the day's action, right? Gold's day was very bad, undoing everything that happened the day before, but still significantly higher on the week. It probably ran into some buying in this area because this is where the buying came in pre the number on Friday. So that buying is probably there, but it seems to be fading now. Now, moving to silver. Silver started out almost as weak as gold and then bounced, and silver is significantly stronger than gold today. So one way to explain that is quite simply the money coming into gold is stretching it more on the upside because it's more impulsive. It's very macro discretionary. And while there is buying in silver, there's less selling in silver. So what do I mean? When the buying runs out in gold, you'll see sellers come in, people taking profits. There are longs in gold. There are really no longs in silver on the macro discretionary side, small longs. And there's just not as much organic selling, meaning there's not as many people who want to make delivery right now. I suspect that China is on a buying spree for silver right now while India is buying gold. They seem to take turns. Anyway, that's the one-day comment. Everything, this trend line, I drew the trend line there just for effect. This is silver right now. It can go sideways for a week. You should be happy. You should be not unhappy. Gold, yeah, shitty day, right? But this 50-day moving average, to me, running parallel with an area that was sold last time is key. So if we get below the 50-day moving average and below this line, and the line turns down, then you'd be worried that we're going to go to this level here. Otherwise, nothing's changed here. Okay. Bitcoin, quick comment about Bitcoin. Has had a horrendous couple weeks. Bad news after bad news. So the first one was the Mt. Gox settlement was done, which implied that coins were locked up for, I don't know, maybe 8 years. I think it was 2017. I'm not sure, but it was money that was locked up for almost a decade got unlocked. And some of those people hit the bid. They got out. on the settlement. And then Germany is reportedly selling its Bitcoin holdings, which I have no idea why they had it to begin with, and I have no idea why they're selling it. But you know that if there are two announced public sellers, then that's an opportunity for people that want to make money selling it and buying it later, shorts, uh, to sell it and to sell it hard and to make it look as worse as humanly possible. This is common in every market. It's common in oil. It's common in gold to the point of criminal. And now it's going to be common in Bitcoin to the point of criminal too, but there'll be no prosecutions for 10 years or so. Anyway, so moving to, well, that's something I'm working on. I'm not supposed to see that yet. ING's gold report card. Okay, so in premium ING's monthly gold report and commentary, I'll give you some excerpts from that. Yesterday, silver upside and food downside. We talked about silver from Michael Oliver's point of view, as well as the fact that food prices coming in is not true. JPM looks at rate cut effects on gold and silver. We got that, put that out yesterday as well. They have, although they didn't announce their own rate cut following agenda following Citibank, they did announce what they think would happen given rate cuts over the next year. And we have the performance that they put out for every asset class, including gold, silver, and implicitly copper. China's Enbridge builds a new channel for cross-border settlement. That's a headline coming out of China. We're picking up some of their local media now. EF Bullion is a guy who's helping us out with that. And we're putting those up just to give you an idea of how informed they are. And in this story, you'll find, if you read this story, you'll find that they know less than you do, but more than the rest of the United States does. So that's the way things are these days. Okay, so let's moving on. Gold monthly, the bull run is not over yet, ING, right? Gold has surged. Here's a quote. Gold has surged more than 15% so far this year and remains at historically high levels. We believe the record-breaking rally is likely to continue through the end of 24 with the current global geopolitical and macroeconomic landscape supporting the precious metal. So in the report, they touch on all the main points and give some comments. Again, I like ING's regular reports. They're a good status update as well as a good, finger on the pulse of what banks are thinking. They don't have a lot of metals business, I think, yet, but I have a feeling that they're about to get into it. All right. So here's a little bit of an excerpt. Gold breaks records in the first half. Gold has surged more than 15% year to date, mostly on safe haven demand amid the conflicts in Ukraine and the Middle East, as well as buying by central banks. I would put this as first, and that is second. These are the events that got it going, and these are the events that keep it going. Or put it this way, these are the things that have been going on for 2 years, 3 years, 4 years, and these are the punctuation marks that make it rally even more. Gold traded above 2,300 for most of the second quarter and touched 2,400, I think at least 3 times, and recorded its third straight quarterly gain, marking its best run since the COVID pandemic. So in the United States, the only thing that performed better than gold this year is U.S. stocks, but they're leaving out silver. Hello, ING, silver outperformed U.S. stocks, according to that. Anyway, all kidding aside, this is a gold report, and banks don't talk about silver that much because it's too important. That's what I think. The precious metal set record after record in the first half of the year, despite the U.S. Federal Reserve keeping its rates high, strength in the U.S. dollar, and divergence in U.S. Treasury 10-year yields and ETF holdings and gold prices. Correct. If you want to understand why that is, it's because gold is still correlated to these things. The beta on the correlations has changed, number one. And number two, gold is following the Chinese 10-year bond yield because they're buying it to back their bonds. We believe gold is poised to keep its positive momentum going in the second half amid the current global geopolitical and macroeconomic landscape, while central bank demand is expected to grow. Interesting. Let's go back. The report also includes some insights on U.S. rate cut hopes. Uh, they're boosting gold, which we saw on Friday. Central banks keep buying gold, and it goes through all the banks that are buying that. Gold ETFs turn positive in May. This is actually interesting. If you look at U.S. gold ETFs have been nothing but outflows for the past 2 years, and now you have those inflows coming in. So you might have a broadening of the gold buying cohorts. Net positions on COMEX hit 4-year high. Well, yeah, that's because macro discretionary funds are in. Safe haven demand will support gold. And that's what they think. And it's all continued in premium. We have the full PDF. Market news. Um, I think these are kind of significant in a micro as well as macro way. U.S. House Democrats to meet behind closed doors amid the debate over Biden's path forward. I don't know that it's such a debate as they want him out and they're trying to figure out how to get him out. The debate is how to do it. President Biden dug in Monday, telling a broad array of Democrats that he was committed to running this race to the end. Editorial comment: Biden doesn't want to get out, and all those people in Washington that surround him closely, namely the White House, they don't want him to get out either because, opinion, they're all in on the cover up. All right. They're all in this together. They all pulled the trigger on the gun, even though the body was already dead. The people outside of Washington that helped facilitate and enable this charade for the last, call it 6 months, but really it's really like probably 3+ years, uh, including the New York Times, the senators, the congressmen who were aware of but blithely dismissed it because it was in their best interest, are now distancing themselves. So when the New York Times comes out and says we think Biden should step down, they're sounding the alarm because they don't want to be implicated in as part of the problem that kept him in. They're all guilty. And this is not a Democrat or Republican thing for me. Um, I think it's treason. I do. I mean, it's a conspiracy, right? That's what a conspiracy is. When a group of people get together to perpetuate something that's unlawful. And I think the law was being broken. That's it. Or put it this way, the law was being twisted to not be broken. So that's kind of important to me. More than 3 million people passed through U.S. airport security checkpoints on Sunday for the first time ever. So the economy is really not slowing down if you have enough money to fly. However, if you don't have much money at all, your ability to buy Pop-Tarts has decreased significantly. So everything that's happened since Trump won since COVID, let's put it that way, including Trump won and um, Trump won, right? There's Freudian, including Trump and Biden, is uh, making the poor poorer and making the rich richer. There's been no change, despite all the noise. Higher payroll and other expenses are eating into airline profits despite strong travel demand. Yes, they're still making profits, though. They're still making profits. Shut up. Boeing's quick fire cadence of deals with U.S. prosecutors and a key supplier sharpens the attention of its board of directors over the next big task ahead, finding a new chief executive. They're trying to clear their plate off and settle up. You saw this with J.P. Morgan with the gold market and trying to clear up their problems with the banks. Microsoft told employees in China that starting in September, they'll only be able to use iPhones to work, effectively cutting off Android-powered devices from the workplace. Isn't it interesting? When I first started on Wall Street and they were talking about the iPhone, it was the iPhone will never be accepted by big business because it's too outside of the network. And so they wanted you to be on Blackberries because Blackberries ran through their servers for emails and what have you. Now the iPhone is the thing that they like for security, and they don't like the Android because it's more open source. Think about that. All right. Geopolitics. I don't think there's anything new to say here, but there's information. And here's what we have on deck today. 10 a.m. Chairman Powell speaks to the Senate. At 10 a.m. tomorrow, I'll speak as well. CPI on Thursday and PPI on Friday. And there's the report from ING. That's it. I'm Vince. Gold's unchanged to lower now. See, I don't want to make everyone miserable here, but unless this buying comes back, then this will probably not hold. I think this buying is macro discretionary buying that bought before the number, bought after the number, and didn't get filled, and now they're still buying. So they're buying the first pullback. They'll buy the second pullback. Will they buy the third pullback? I don't know. So give this a day. If the market holds here for another day or two, then it might be safe to be speculatively long. So this area here, remember, it was bought here, sold, right? And then when it broke it, it ended up being sold at the level it was bought. Kind of failed here, and now here we are up here, and it's being bought. So you can argue to be bullish right here with a stop out below, let's say, the 50-day moving average. I would just say be flat and buy it if it's here another day from now. Who knows? All right, I'm Vince. Have a great day.
Well, thanks for tuning into today's Markets and Metals with Vince Lanci. The show is brought to you each day by Miles Franklin Precious Metals, who we encourage you to consider for your next gold or silver purchase or sale. Miles Franklin has pricing that's among the best in the industry on most products, and Arcadia is proud to be a licensed Miles Franklin representative and happy to help whenever you have questions or want to place an order. Where this week's specials include 2024 Silver Eagles from the U.S. Mint for only $5.95 over spot, and 2024 1/10 ounce Gold Eagles for only $39 over melt. And of course, you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Happy to answer any questions you have, give you pricing on other products, and help you get set up with whatever you need. So thanks as always for tuning in, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.